Hey, thanks for joining us once again on the Sky Blue Wealth Recap channel for a few minutes today. I'm Eric Powers, I'm a certified financial planner, and today we're going to talk about the January Jibe. So as we do in these videos, we talk about things in a top-down format where we start with the economy, we then talk a little bit about the markets, and then we drill it down a little bit further to say, what can this mean for a portfolio? Or how could a portfolio be updated? So in reference to the January Jibe, a jibe is a sailing term, and by the way, again, the name of this channel is the Sky Blue Wealth channel, Sky Blue, and then also my logo happens to be a couple of sails. I am a sailing fan, and I love to sail. But anyways, in reference to the terminology, a jibe is when the stern of a boat, when the back of a boat goes across the wind, and the sail suddenly jibes to the other side of the boat and puts you on a similar point of sail that you were before the jibe. So that's basically it. The stern goes across the wind, the boom jibes to the other side, and you're on a similar point of sail. Not the same, but a similar point of sail. Volatility is the theme for the year. It's very likely going to be the theme for the year. Similarly, inflation may constantly get headlines throughout the year, but volatility, the ups and downs in the economy and the market will consistently play through for probably the entire year. But some of the inflation headlines are that growth, although we have seen significant inflation recently, it's probably going to continue in some pocket areas, but it's probably not going to be widespread all throughout the entire year. It may still remain high-ish through the remainder of the year, but in specific pockets. So let's talk a little bit about vacation. Right now it's February. I know a number of people, we did not travel for February vacation, but we have a number of friends that did travel. And things were expensive for them. Airfare, lodging, everything with traveling and vacation was very expensive for them now. Could be because of February break when everybody's going, but it's much higher than prior Februarys. As I'm sure you're also aware, energy is costly, and it's gone up more significantly than some other areas. We haven't necessarily fully felt it at the pump yet. So although energy prices are going up, meaning the cost of oil, crude oil, has gone up, we're still paying, I think I paid $3.53 today at the pump. We could be approaching $4 a gallon. Hopefully not, but that's very likely where we may be headed. Vehicles, cars are not cheap right now. I think I read something, or maybe even said it here, that the cost of cars since last year has gone up somewhere around like 36%, if not higher. Don't quote me on the exact percentage. Anyways, there are a couple of areas that have stayed similar to where they were and have not overly inflated. So for instance, one may be childcare or personal services. I've got clients that have kids, and then they're reporting, their taxes and what's happened with childcare costs, and those are relatively similar to where they were the prior year. So I'll start by talking about emerging markets. Although they have had good growth this past year economically, they still have some headwinds in translating that over to market growth and into portfolios. So as we get into markets and portfolios, I'll talk a little more about China and Russia. But let's bring it back to the U.S. The U.S., we're headed more towards a normal year. Although we've had a big hit in January, and we started the year very in rough waters. It's expected that we as an economy will continue to grow throughout the rest of the year. Now, that does not necessarily mean that it's going to be the same type of growth and this is where I'll talk a little bit about the jibe. We still have the same destination. We believe that there will be growth. However, we have jibed and brought the sail across in order to be able to catch a better wind. So, although we're expecting that the economy is going to grow, January did start off very rough. But we have to remember the big picture. It's a 12-month picture, if not a little bit longer, that we're reviewing to say how is the economy doing now, and what do we expect from it. One of the big things that we're jibing away from is COVID. It will probably not be a leading headline for the rest of the year. We will certainly have different variants that pop up, and they will be addressed as we go. But I don't think that they are going to be the leading headline. So on an economic and market front, the fundamentals will probably start to take over in the forefront again. Where we'll start to be talking about how markets respond in this environment, which is a normal environment, as opposed to markets are responding to COVID, that kind of thing. So as we move into the markets, I want to talk a little bit about this 10% correction that we've seen in January, or nearly 10%. Certainly it has people on the edge of their seats wondering, what does this mean? Does it mean something for the remainder of the year? Just a reminder that corrections are normal in most calendar years. And the first half of this year, we're probably going to experience maybe even another one. So although we don't enjoy corrections, they are sort of a necessary part of the cycle. And also as a reminder, on average, there's 1 to 2 pullbacks and or corrections throughout a year. And occasionally we'll pepper in a bear market, which are definitely not fun. But that's the average, 1 or 2 per year. Now, some years, just like last year, we have none. We have absolutely none. So in order to bring out the average to 1 or 2 per year, just think about it that way, that we missed 1 last year, so maybe we get 2 or 3 this year. I don't know. So as we talk about the markets and Russia and Ukraine, certainly the uncertainty surrounding that could cause some big peaks and troughs. So as this conflict is new, the war, the invasion, although it is new and it will likely have a ripple effect in the markets, the U.S. market is really still trying to assess, what will be the impact and the potential resolution. Some of the things that will contribute to higher volatility or the height of the volatility will be really, how is it addressed? Is it diplomacy? Is there an ongoing war? Does it somehow draw us in? Are there winners? Are there losers? Lots of different things to be able to evaluate. How is it really going to affect the markets? So market opportunities internationally may be a little bit divided. We're still not overweighting international. But how it could be divided is between developed and emerging markets. The issues that are facing developed markets right now are really it's largely Europe and Ukraine. Basically right now it is trading at a discount. Europe is trading at a discount in general. But we're not 100% sure what the geopolitical issues and war will mean for Europe in general. So that could be one challenge there. In regards to emerging markets, we talk about China quite a bit, right? As China goes, so do emerging markets, generally speaking. Although there may be some potential in China, they are still pursuing an easing policy, a monetary easing policy, while the rest of the world is actually tightening their monetary policy. So what does that mean? As you've heard, our interest rates are going up starting next month, starting March. However, China still has an easy money policy. According to a number of analysts, although China has showing growth economically, one of the things that they really have a problem with is converting that growth into corporate growth. And lastly, their earnings growth, their corporate earnings growth, has been slower than that of the US and developed economies. So as we wrap up the discussion of markets, we will talk a little bit about Russia. Russia still categorically does fall into the emerging markets segment, and their economy could start to be hurt as sanctions start to settle in. I'm sure you've probably heard that Biden and many developed countries have imposed sanctions on Russia, mostly on the oligarchs, but at the same time that could have an effect on earnings within Russia. So really we're just taking a wait and see approach here. We're not quite sure what that will mean for Russia and any investments there. All right, so as we drill this down a little bit further into portfolios, what are some folks doing? They are adding materials and metals into their portfolio. These are a little bit more defensive. And consideration of the dollar, our US dollar, that's being watched to say, is the dollar going to weaken or is it going to strengthen? That's also part of the consideration in regards to the geopolitical responses and people are making short-term trades in these areas. We still favor domestic over international in general, so we still overweight domestic due to the earnings support that we've seen and due to the earnings strength into the valuations. One of the areas that you've probably noticed is that large tech has started to slow some, specifically in January. So if you track I think it's the NASDAQ 100, which is basically the large tech companies, it has actually not produced compared to other sectors. So it's not a favorable area at the moment. And last but not least is small cap public companies are sensitive to some of these market swings, and they've been beat up pretty badly. So there may be some opportunity there, but again, they are public small companies. So some of the problems with being public is they can get hit pretty hard, pretty quickly, just based upon sentiment, as opposed to fundamentals of how sound that company may be. All right, so in closing, just a quick reminder that what we do is we watch cycles and we evaluate factors, watching for things that may overinflate a cycle or may accelerate it. And although aging, our economic cycle is approaching the mid to late section, and very likely we're not headed towards a recession, at least this year, probably even longer. But if you need help or you're looking to talk to an advisor, please feel free to reach out. Subscribe to my channel and hit like, and subscribe to the monthly e-newsletter. I'll talk to you next time.